Hello everybody, let me fix my hair. Welcome to Bitcoin Daily, 9 a.m. Central European time on the dollar. We do the show every day, Monday to Friday, because we gotta know what's happening in Bitcoin, altcoins and everything else. And today we're gonna look also at DXY and the stock market, and we're gonna talk a little bit about the housing market, the housing bubble. Will it crash down? Will it not crash down? You know, what to do, what not to do, and stuff like that. You know, my thoughts about that. So, you know, if you're interested in that, you might, follow along and look at that. Most importantly, is this thing over here that we are looking on the screen right now gonna crash towards downside or not? That's a big question. So that's what we're gonna do today. How's everybody doing? Hope everybody's doing well. Dutch Ring Racing, good morning, man. How you doing? Tired legs, back in 5. Dobry jutro svi. Morning, Vanilla, how you doing, man? The central plane, what's up? What's up? XRP Legend, good morning. Gabriel, yo, what's up? Edward is in the chat. That line, yeah, we got all the good lines, And these lines are not as important as these lines over here. You can see how here we are breaking a little bit towards the downside. Where is Mike? I haven't seen him for a while. Yeah, I mean, he's got a kid, you know, he's got a, family, maybe he's doing some stuff. So, you know, he'll be back eventually. He'll be back, you know. What I've noticed when, stuff goes up, everybody comes back, everybody comes back. If you haven't noticed that, I mean, if you remember the move towards the upside up here, if you remember the move towards the upside, as soon as, we started pumping up, the chat on the Telegram exploded. Everybody was super happy, doing trades, doing investments, talking about altcoins, everything was doing nice. And then as soon as we start falling down, like, chat just died immediately, 100%. It was like we are, at the bottom of the, bottom of the bear, bottom of the bear market again. So there is that, But people come back. That's just the way the life works. You grow, I grow, even I'm back, even you're back. Is it time to buy Bitcoin 1000x and buy a Toyota? Rolo, what's up? How you doing, man? Trim, good morning, kumpis. Good morning, Trim. So, where are we gonna start? I'm gonna show you one very interesting chart about housing market. We're gonna talk a little bit about housing market, but we're gonna do that after Bitcoin and the DXY and the stock market, because not everybody is very interested in that. But I think if you wanna hear my thoughts about what I think is happening and what's gonna happen, you might stick around for that. That said, Bitcoin up here did a very nice move towards the upside. Let's just remove the lines. I have actually a short position on Bitcoin over here, somewhere up here at the top. I entered the trade at 213 or something like that. 213 up here. What is it? 213, something like this over here, give or take. Over here, up here at the top, I entered a short position over here, and it's still playing out so well right now. But the Bitcoin does look a little bit, not so weak. I was actually expecting this, just drop, straight down over here. That didn't happen. It is actually going inside some kind of consolidation up here right now, pulling back below the moving averages up here. But let's talk a little bit more about interesting stuff on Bitcoin. First, we're gonna look at the daily time frame. Daily time frame did pull back, and this pullback that a lot of people have been waiting for, this actually happened right now, right? So can we go all the way up to the 20 moving average up here? Definitely can, because there is a lot of important resistances up here at the top. You'll see up here there are 3 resistances actually that are very, very important, and we got also a trend line down here that's very important as well. You can see up here it is in the range up here at the top. So did we come all the way to the top right now? Is this it? I think it's down here because of the trend line over here right now. So you can see right now that it starts around the 22.5 all the way to 22.8, give or take. This resistance area, but we are hitting the first resistance, and that's this 20 moving average, very important level as well. You can see here we came to that level, we bounced back, we opened below the 10 moving average. Right now we are pulling back. We don't have any kind of wick on the upside, we just started going towards downside. Alex joined TFS. Man, enjoy the green name, enjoy the emojis. There is, you can also, welcome to join the Telegram. It's 4 months, man. Why am I saying this? Why am I saying that? I don't think you're in the chat. It just, pops up. But it's nice that you are, 4 months in. Very nice. It's actually more than 4 months. It's not 4 months. It's, 4 thing. That's it. So we are hitting this 10 moving average up here, and we are pulling a little bit. We don't have any kind of, wick up here on the upside. We got some kind of, wick, but, it's not actually a wick. So can this, go a little bit right now down here and, blast towards the upside? The candle is not closed yet. It's a daily candle. We got time, guys. We got time. But whether we're gonna come all the way, you know, 22.5, 22.8 into this, you know, resistance area, and even maybe, you know, break that towards upside up here, that depends to be seen. Now, there are already some kind of worrying signs over here that this might be some kind of top. Number one, that's the 10 moving average. Over here, that's the resistance, big resistance on daily time frame. And if you look at on the 4-hourly time frame over here, let's remove everything right now. We came up to the 20 and 50 moving average, big week up here. We pulled back to the 50 up here a second time, then third time up here we failed to close above the 50. We actually opened above the 50, but we pulled back, and this is the 1, 2, 3, fourth time up here. This is the fourth try up here on the 50 moving average. We failed that as well, so we are still below the 50 moving average and the 200 moving average on the 4-hourly time frame, which kind of tells me that this might pull back a little bit more. Now we got you know, support levels down here at the 10 moving average, you know, 20 moving average. We got also very important support level up here at this top up here, and then there are these supports right up here below us. So as you can see up here, we got some kind of support levels down here. So, you know, nothing is right now telling us that, you know, we're gonna, you know, pull below the support up here and, you know, crash even, you know, further towards downside. So, you know, there is no need to worry just yet, right? There is no need to worry. We are just hitting one of the first resistance line, and we are not actually breaking that towards the upside. So I'm still thinking that, you know, although this can just pump up here above the 50 moving average, if it does that, it might become, you know, very, very bullish and continue pumping towards the upside. But if this, you know, whatever this triangle up here is, let's go to 50-minute time frame up here, right now, plays towards the downside over here, plays towards downside, we still became some kind of supports right below us over here, right? So I wouldn't say that this move towards right now, that's, you know, continuing towards downside over here a little bit. You can see over here on the 4-hourly time frame that we had this, you know, weak to the 200 moving average on the 4-hourly time frame. We hit the 200 moving time frame up here, 200 moving average over here. This on 1-hourly time frame hit the 200 moving average, and, you know, still, you know, breaking down below the 10 moving average. So we cannot actually break above the 10 moving average. So this looks like it wants to drop a little bit more towards downside, but still not, you know, it's still not, oh man, we broke some important, very important levels, we are going lower, anything like that. So so there is still no need to worry. But, you know, when the need to worry is if you, I would say, if you go below, you know, something like 21.8 or something like that down here below these levels down here. These levels, although all the 10 moving average is important, this you know, top up here is very, very important. I would say, you know, time to worry is if you go back below 21.8 or something like that. Now that's time to worry, because you know, we should definitely keep some kind of, you know, support. If we are bullish, we should definitely be able to keep some kind of support. But if this actually fails on downside, you know, time to worry, time to worry. Right now it's not time to worry or anything like that. It is pulling still towards downside over here. After the CPI numbers yesterday, we started going a little bit towards downside, a big move towards upside, a little pull back, and you know, right now we're consolidating. Now on the weekly time frame, we don't have anything yet. We are just pulling a little bit towards upside up here. There is also important support line up here on the weekly time frame that we are right now trying to hold, but, you know, we don't have anything on the weekly time frame. So I actually shorted because we came to the on the 4-hourly towards the 50 and the 200 moving average, and I was thinking, I mean, it's a resistance, you know, resistances are for shorting, you know, and supports are for longing. That's just how things work. We pumped big time on the CPI numbers, so I was thinking, pumped big time, hitting major resistance levels. Let's try to short it. I mean, it could work out. It could work out. So there's that bullish flag, in my opinion. So we're gonna see that. Over here, if you remove the moving averages a little bit, we're gonna draw some nice lines up here on the chart. As you can see up here, there is this trend line up here that we are also hitting resistance on top up here, and there should be some kind of line up here, maybe something like up here, maybe this is some kind of expanding sideways musical instrument up here happening, but it's a little bit tricky to say. What we are most interested in is this line over here, and I can see here even this trend line up here is giving us resistance towards upside. So I'm thinking, as you all know by now, I think I sold a lot of my stuff, you know, spot portfolio around up here at the top. So will I, you know, FOMO back in? And I think if we start breaking this, you know, trend line over here towards the upside, I think I will, you know, FOMO in and, you know, maybe start buying, you know, back in on the spot portfolio. And this also looks like some kind of expanding musical instrument towards the downside, so this has pretty decent chance to break towards the upside. Now here comes the problem. So you can see right now that we are you know, at some kind of important levels of resistance. We need to break that to go higher, so forth, so forth. Over here we created a very nice support around 21.5, 21.6, and by, you know, by any kind of technical means this can definitely break towards the upside. The problem, the big problem, is the DXY and the stock market. So over here you'll see that we had some kind of a some kind of channel going over here. We kind of some kind of double top being created up here, but this double top up here kind of failed, and right now we are going maybe for the triple top or something like that. I don't know. But this looks very, very strong move. You can see up here on the CPI numbers, we pump up here and we continue pumping towards the upside, and just like Bitcoin is, the stock market is not. We're gonna come back to that, but we are definitely moving in an upside direction up here. And the big bullish signs for DXY is that we have, you know, pumped from the bottom down here all the way to the 50 moving average. You can see how we are holding the 50 moving average. We are hugging the 50 moving average over here. So we came to the 50, got rejected, came to the 50, got rejected, tried to break to 50, got rejected, stayed up here with a doji, went all the way down to 10 moving average, and right now we are again breaking this 50 moving average. So this is this looks to me like some kind of, you know, bull flag up here towards the upside in some kind of longer we're not drawing very precise line, but it does look like some kind of, you know, bull flag up here that's actually going to continue towards upside. Now that happens, we are expecting a dump. Now Bitcoin is following a little bit on the short time frames. Bitcoin is following a little bit on the short time frames, the DXY, because it's doing the same move, kind of move up here towards upside over here. But on the bigger time frames, it's actually not. Now look what's happening on the stock market, guys. On the stock market up here, yesterday, let's go to the 4-hourly time frame up here. Now let's go to 1-hourly time frame. Yesterday this was the move on the stock market up here. It went a little bit towards downside up here and exploded towards upside. This is where the volatility started. Went a little bit towards upside, got again rejected by some kind of line up here, and right now it's pulling towards downside just like Bitcoin. If you look at the Dow Jones is doing the same move, and the Nasdaq up here also doing the same move. But if you zoom out a little bit up here, let's go to 4-hour. I think you can see it a lot clearer up here. So this is the Nasdaq. Remember this, you know, rising channel up here that failed towards the upside, got retest up here, failed again, tried to go up, went below the zero line, went below the outside the channel. Right now trying to get out, you know, stay above the channel. You can see up here these two, you know, these two dojis up here at the top. And right now it looks like we are breaking slowly again towards the downside. So, you know, Nasdaq doesn't look that strong. This on the 4-hourly time frame, so I'm assuming that Nasdaq, unless it, you know, somehow pumps back up here towards the upside, yeah, you know, I'm looking for more movements towards the upside. So it does look a little bit weak. The Dow Jones is still in this, you know, triangle up here. I don't know if you've been following. This is still in triangle. It's consolidating up here towards the upside. It had this very nice move towards the upside where it tried to break it, but it's still in the middle of the triangle, so you cannot say whether this is bullish or bearish. It's just consolidating in some kind of triangle. And S&P 500 up here, we had some kind of bigger. Let's go to the daily time frame on this one. This I read you the lines up here a little bit. It looks like some kind of rising wedge up here where we you know, right now going for another move towards downside. Now if you look at just this part over here on the small time frames, you'll see that this trend over here towards the upside broke down, retested that move, and right now it's pulling back towards downside. So for me, to me, you know, it looks like S&P and the Nasdaq is pulling back a little bit. The Dow Jones is still consolidating, but the DXY does look strongly bullish, at least the way I see it. So if I had seen, for example, some kind of chart on Bitcoin, on altcoins, something that looks something like this, I would say, hey guys, this is a long position up here if I ever saw one, right? So that might be that, right? So I'm not gonna, you know, doom the Bitcoin just right now, because this can, for whatever reason, pump up here towards upside. You can see up here there is also a very nice trend line over here just below us, so we're not below, quite below that yet. And can we move up here towards upside, bounce, and, you know, continue towards upside? Can the DXY drop and get rejected by the 50 moving average? I mean, technically it can, technically can over here get rejected, but you know, just by looking at the chart and how the price is actually developing, there doesn't seem to be much bearishness up here. Can it get rejected again? I mean, it can, but you know, I would say that's less probability than actually continuing towards the upside. So this expanding musical instrument up here that's happening right now on the daily 4-hourly time frame, something like that, right? We are definitely at some kind of resistance. And if this is gonna break towards upside, I think it's gonna break towards upside right now. So if it gets back above the 200 moving average, you can see up here the 200 moving average, 200 moving average, 200 moving average. 3 times we tried to get above 200 moving average, failed all 3 times. And right now we are coming to this major resistance. So we are at major resistance. We need a small move towards upside to break this, you know, expanding musical instrument towards downside and become a little bit more bullish than we were, you know, lately. But we are just not quite there yet, yo. Maybe tomorrow. So do stop by and, you know, check out what's happening on Bitcoin Daily tomorrow. Mohammed, big up TLA. Did you long like crazy? Was it a success with yesterday's cup? No. Actually, my ideas about the CPI numbers were CPI numbers are gonna come out bullish. And for some reason I notice often that, you know, when stuff is bullish we dump, and when stuff is bearish we pump. So my idea was that you know, CPI numbers are gonna come out bullish and I'm gonna short the market. So I did a 50 bucks short on the CPI numbers. You know, it's too much volatility. I don't want to put a lot of money on these kind of trades. You know, I'm not a gambler. I'm not a gambler. So that failed big time because it started going in my direction. You know, I was up like 50% at one point, but then it, you know, exploded. When I understood that, you know, the numbers came out bearish, I was like, maybe it's gonna go in my direction. But, you know, bearish numbers often pump, and, you know, so you saw that. Even though we got, you know, bad numbers, inflation is higher, whatever, right? We kind of pumping, right? We kind of pumping. So there is that. But I do have a new short position on Bitcoin, and that's like I just showed in the startup here. For the guys that have been here, it's around, you know, it's around this line up here, over here, short position. This is my short position up here, give or take. So if it goes towards upside, I'm gonna get stopped out. I get a very tight stop loss and stuff like that. But I'm short right now because it doesn't make any sense to long it right now because we haven't broken this very major level of resistance. So that's what I'm looking for Bitcoin right now. You know, how this is gonna develop, we need to wait a little bit. Today, Elon Musk has been very active on Twitter, posting about the Dogecoin. And what you're gonna see, Dogecoin is only up 3%. It looks like it's consolidating up here right now. So we're gonna see how if this continues towards upside or whatnot. This does look like a nice consolidation, but it is up something like, you know, it was up 6%. Right now it's up like 4%, something like that from this bottom down here. But this is a little bit unusual for the Dogecoin because oftentimes when Elon Musk says something about Dogecoin, you know, the price pumps like 10, 20, 50% immediately. Right, immediately, like instantly pops like big time up here. And you see here there was some kind of pump up here, but it was, you know, 5% pump, and right now it's just consolidating, right? So I'm also taking that as some kind of bearish sign that, you know, something is not the way it supposed to be. You know, up here it's coming down up to the 200 moving average on the 4-hourly time frame. You know, daily time frame up here, 20 moving average, so forth, so forth. The last thing I can say about Bitcoin is when you look at this 4-hourly time frame, this does look to me like a double bottom up here, and double bottom is actually technically confirmed because we, you know, got above this, you know, top up here. So the target for this double bottom should be something like give or take all the way up here at 22.8. And if you just right now remember where we drew our resistance line and stuff like that, I think we removed that, but, you know, 22.8 is a major, you know, resistance level up here that we are, you know, coming up to, right? These levels up here, it's one of the lowest levels, you know, but it can definitely push. So if this double bottom up here does play out, we just might, you know, come up, you know, to 22.6, 22.7, 22.8, give or take, towards the upside. Depends on, you know, how much this is. But this does look like, you know, double bottom up here that broke towards upside. Right now it's curving towards over here. And, you know, it needs to do a little bit slight move up here to come to the resistance levels. I do definitely hope this is gonna happen. And, you know, as I said, you know, I will FOMO in. Now, let's talk about numbers. Were not bearish, but not as good as expected. They were not bearish, but, you know, they are technically bearish if they are, you know, above consensus and expectations, right? So if expectations some X number and you get some kind of higher number than that, even though it's below previous number, it's still bearish because, you know, you missed the target. You missed the target, so there's that, right? Okay, and the next thing I want to talk about is the housing bubble, guys. Housing bubble. So I talked about this before. And how long does it take? How long does it take to sell an apartment in Norway, right? I talked about this before. I said that this is important. I said this is an important indicator for me. And here we got the chart. And we've been looking at this chart before. Let's just copy the chart and put it up here, because why not? Then we can make it nice and big and juicy and stuff like that, right? There we go. So I talked about this chart before. This just shows how many days does it take for an apartment or a house to be sold after its first time listed on the market. So what you're gonna see here is 2019 is a little bit, 2019 is up here, in the blue, and 2020, the year of Corona, up here, start up here. It is, it took a little bit, longer while to get the, to sell the house. But here around October, this changed again, and it took shorter time. And after 2020, 2021, it took even less time to sell the house. This green line up here. It took even less time, 35 days, versus, for example, 48 days, 2020. In 2021, it took only 35 days up here, 33 days, 35 days, and in December, it took 51 days. And in 2022, it took even less days down here, 41 days in January to sell apartment. And the lows down here, it took only 25 days in 2022, in July, to sell an apartment. And this was actually quite crazy times, because I'm still saying it again. In Norway, it was really common and kind of expected that you don't go and see the house and apartment before buying it. If you wanted to get anywhere and buy anything, you have to call the real estate broker, and you just give him an offer. Like, you say, I'm gonna give you, half a million above the price if you stop the if you cancel the what is called in English, showing the apartment to other people. I'll buy it right now, half a million overpriced. And people are getting the apartments without seeing the apartment, just seeing images on the internet, and just buying. The interest rates was down at the bottom, and it was good times. And you can see here that this actually continued all the way through 2022. But in 2022, once it started going up here, you can see here 35 days in 2021 and 34 days in 2022. When it started going towards this line, I was saying, as soon as you start taking longer and longer time to sell the house, something is going on, right? And you can see here, even December up here, it took less days than in 2021. But right now we are in January 2023, and right now, as you can see here, in January 2022, it took 41 days to sell an apartment or a house, and right now January takes 52 days to sell an apartment or a house. It's a big increase. It's a big increase from the previous lows, right? So these was some kind. It's still below 2019 to 2020, 2021. It's still below, but it's rising towards the upside, and I don't think this is gonna stop. So this is the kind of sign that I was actually looking for, because if you extend this chart over time, you'll see that these numbers just go lower and lower and lower, right? So we definitely hit some kind of peak euphoria up here in 2020, July, August. This was peak euphoria, this red line, 2020, when it came to selling houses and the market. And right now, right now, to sell an apartment or a house, it takes 52 days compared to the 2022. And I'm expecting this number 2033 to go even higher above all the lines. Once it's above all the lines, then, you know, panic is gonna hit a little bit. But let's talk a little bit more about this, because yesterday I was also watching a lot of not a lot of videos, but you know, wondering what other people are thinking about housing market. So I checked some kind of videos and looked at what people are, you know, what kind of arguments there are for you know, housing bubble crash and not. And people that are talking about housing crash and stuff like that, you know, they got you know, some kind of ideas that I also got, you know, some kind of new ideas as well. And then I also looked at the other side, like there are definitely people who think that the housing crash won't happen. And some of these people are hugely rich, and they have a lot of, you know, real estate. So, you know, they are hoping it's not gonna crash. So maybe they are living in some kind of bubble. Other people are using different kind of arguments for why it's not gonna happen. And one of the big arguments I've noticed when it comes to the housing bubble, and this is very important, when it comes to housing bubble, is the inventory. In America, they call it inventory, and inventory just means how many houses or apartments there is on the market, right? So if the supply is very, very low and demand is still higher than the supply, then you cannot have the housing crash, and that's very normal. That's really how it is, right? If the supply of houses is lower than the demand, there is no way you can have the crash, right? What people seem to not understand is that, and the argument they're using is that inventory is historically low. You understand? Inventory is historically low. That means that supply is historically low when it comes to housing. And how can we have a housing crash when it's historically low? Just the same way like you had historically low interest rates. And right now you have historically low unemployment rate. And right now you have historically low housing inventory. Do you see the red line over here? So the thing is, people don't notice when you are at the top. The same when we come, you know, some kind of high, you know, people come to some kind of form, they don't notice the change. It is changing very slowly. It is slowly curving down. It's just like, you know, chart on just like any kind of chart on any kind of top, right? It's slowly curving, but people don't notice. People only notice it when it starts going towards the downside. That's when people start to, you know, getting into the fear. But over here, they're still, you know, it's gonna go up, everything's gonna be fine. And at one point, you know, it kind of curves over. So here's what's happening. Interest rates is going towards upside because it went down to zero. Some country even had the negative interest rates. Imagine that. And I was telling my wife, there is like, how low can you go? You cannot go to -10. You cannot stay at zero for, you know, minus, you know, 1-2%, you know, for the next 10-20 years. It's gonna go up. It's gonna go up. So it started going up because all kind of problems started arising. Right now, people are having a lot of time, you know, paying their debt, mortgages and stuff like that. Right now, people are having a lot of time, you know, surviving. They saved up money to, you know, manage from month to month. They have this, you know, buffer zone where they have, you know, stake some money that, you know, they can survive for a little while. But if the interest rates continue going towards upside, if the interest rates also continue going towards upside, then we'll have more and more problems. And at one point, there won't be any more cash left to, you know, pay the mortgage. What happens then? Then you have to put a house out for sale. Then you have to, you know, foreclosures. Then the bank comes and takes your house and stuff like that, right? All kinds of problems arise, right? All kinds of problems arise. We are not at that point just yet. We are at the point where we are going, you know, through this curvature at the top, where, you know, inventory is low because everybody bought. The builders that are building the houses here in Norway, they have stopped building. There have also been some kind of they have stopped a lot of new projects, so they're not building anymore. So inventory does seem low, but that's because there are not a lot of building. People want to sell. They're like, let's wait till the market picks up a little bit again, because we don't have to sell again. So they don't want to sell cheap. They want to wait a little bit this out. But it's kind of curving already. And it's only a matter of time before we come to the drop over here. It's only a matter of time before we come to the drop, because we are going through this curvature right now. It's, you know, inventory is at all-time low, but at one point people won't be able to, you know, pay the mortgages. More and more houses will come to the market. The price will slowly start going towards the downside. And at one point, the fear and the panic will kick in, and there will be a crash. And that's how it happens. But you have to understand, just like with the interest rates, that we had all-time low. Just because you're at all-time low, that doesn't mean that you are at in good times. That means that you are at the top. Just because you have an all-time low inventory, doesn't mean that you are in the best housing place ever. And right now, the last thing I want you to understand, just because you have an all-time low unemployment doesn't mean that the economy is booming. It means that it's very, very dangerous environment. The best time to invest in economy is when employment rate is at 20-30%, when interest rates are up at 50, when the housing market, when the demand outpaces the supply by 10 times. That's the best time to invest in the market. Why? Because how much worse can it get, right? Like you're at the bottom. That's time to invest. But when everything comes so low, that's when it actually starts rising up, right? We saw that with interest rates, we're gonna see that with the unemployment, we're gonna see that with the housing market, with this inventory, when supplies overtakes the demand and people need to undercut. This is not, the prices right now, I would say stable here in Norway. We had some kind of stable top up here at Norway right now, right? In America, I've seen, in the US, I've seen that the housing bubble and stuff like that is a little bit tricky, and there are definitely areas where this is already going towards the downside a little bit more. But you gotta understand, we are buying when everybody's in fear, just like any kind of bottom, right? When everybody's in fear, nobody wants anything to do with Bitcoin, right? That's when we are buying it, right? We are buying down here. We are buying the bottoms, right? That's when unemployment is, sky high at 20-30%. That's when, interest rates are 50%. That's when, whatever the number, right? That's when, the supply market just, wrecks through everything. And, you got, 50 million houses that are, not sold and stuff like that, right? So that's what we're looking for. We are looking for these, panic times, fear times to buy. But when stuff comes so low and people are in euphoria over interest rates, people are in euphoria how good the unemployment rate is, when people are in euphoria that inventory market is fine, we have down supply, it's lower than ever, it's still buyer's market. That's when things starts slowly to roll around and change. So we're gonna talk again about this chart over here in January, February, in March. So in a couple of weeks, we're gonna bring up the next chart and see where this dot up here is right now, because following how long it takes for something to sell over time, especially when you have some kind of statistic over that over time, you can definitely see some kind of changes. So I don't think what the price, average price of the housing, how did the price go up, 2% up or 2% down. I don't think that that's a very good estimation of the housing market. But how long does it take to sell an apartment? Now, of course, this can be an outlier. I mean, this can come right back down again, right? But if this persists over time, we gotta assume that it's not an outlier. In statistics, outliers are statistical anomalies that happen often for whatever reason, and you can remove these things over here and then draw nice patterns on the chart, right? It could be an anomaly, it could be an outlier, right? But the only way we can know whether this is an outlier over here and it will pull back down here towards the downside is that we see progress over time, and the longer this actually takes, it means that something has actually changed. So we're gonna come back to this chart again, and the last thing I want to show you is again in the same report up here. We can just open entire report up here. Where is it? Where is the report? No, this is okay. So yeah, this is the chart I want to show you. No, it's not this chart. Where is the report? Whole report. Click here. There should be a link to the damn report in PDF. Let me see on my mobile, because I actually watched this on the mobile phone. I just want to show you one more thing, how they are changing they're not changing statistics, but they are making it look like, you know, everything is fine. Wait, there was one more thing. Just give me a couple of seconds up here. I'm gonna find this chart. Where do you click that? Up here. Yeah, it is this one. Let me do this over here. Just a second, guys. Let me do this up here. Be right back. There we go. Okay, we're back. So this is the report. This is the full report up here. And what you're gonna see up here, and this is the chart I want to show you guys. I don't know if you can see this up here. This is a national, you know, price development, right? 2004 to 2022 nominal index. I don't know what's, and season corrected index as well. So this is just some kind of index over the price development over, you know, since 2004 to 2022. This is the 2008 housing crash. It doesn't seem that bad. We had a small dip and we went up, a small dip down here and went up, small dip down here. And right now we're having this, you know, double dips up here. What you're not seeing up here is, if you look here on the side, it says index log scale. So instead of showing, you know, these big moves towards the upside, stuff like that over here, for example, extreme explosion up here in the price, and you can see how slowly it curves towards the upside up here. Slowly curves towards the upside, just like over here. Slowly, this is a lot more brutal move towards the upside, but it's kind of slowly moves towards the upside. This thing over here also moves towards the upside. If you know anything about log scale, anything that moves towards the upside a little bit is going parabolic, guys. It's going parabolic. So normal people will look at this chart and say, it's a small dip, because they don't understand the log scale. The log scale just, you know, makes everything looks normal, and that's why we missed, maybe a lot of people have missed, you know, the top up here, because they don't see it as top. People have been watching this on a logarithmic scale, and if you look at this on a logarithmic scale, and if you look at this on a rhythm scale, like, it just went a little bit up. It just, you know, we are not, you know, we are not going parabolic. There is, you know, this over here was, you know, parabolic move on a logarithmic scale. So this was extreme move towards upside. This was extreme move towards upside. But over here, it doesn't seem that we, you know, went that much up. We just went a little bit up right now in consolidating. But when you look at it on a regular scale, it looks something like this, right? It looks extreme. Like if you've seen this over here on a regular scale versus logarithmic scale, you know what something is up, right? You're like, oh man, this just exploded towards upside, right? And the same thing goes with this chart over here. It looks on a logarithmic scale, it just look like, we just slowly, you know, going towards upside, no problem, right? Whatsoever. But if you could draw some kind of lines on this, let me do that. Do it. I'm gonna draw lines over this, over the thing over here. Let me just do it like this. I'm gonna show you how we are losing momentum. Just a second up here. I'm gonna draw lines on that logarithmic chart and show you how we are losing momentum on the chart. Just do it like this over here, and just do it here. There we go. Okay, so when you see this, let me just zoom in a little bit better so you can see this up here better. There you go. There's a chart. We're gonna just do it like this because it's easy, right? And look here, guys. You can see up here there was some kind of, you know, trend up here that broke towards the downside. Right now it's still climbing towards the upside, but it's losing momentum, right? This trend over here is losing momentum. This trend over here, doesn't matter how you draw it, it's losing momentum. And then the next trend up here is losing momentum as well. give or take, losing momentum as well. And right now we are, you know, have this, you know, move up here. We are going towards upside. And we are losing momentum as well, right? So you can see here that we are every move we still continue towards upside, but we are, you know, losing kind of momentum a little bit towards downside. And right now over here you cannot see it, but this thing over here is actually curving towards upside. Over here it's curving towards upside on a logarithmic scale. When you see curvature towards upside, like here, curvature towards upside, this was just going straight, you know, a little bit up here. This was a little bit bigger move up here towards upside up here. And it did fell down to 2017. I don't know what happened up there, but when you see curvature towards upside, that's that on a logarithmic scale. That's an explosive move up. That's an explosive move up. That's what I want to come to. That's explosive move up. So, housing bubble, is it happening? I think it's happening. I haven't seen actually good arguments for why the housing bubble should not happen. The people that are actually promoting that housing crash or stuff like that, it's not gonna happen, everything's gonna be fine. It could happen that everything is gonna be fine, but it can also happen that, you know, everything is not gonna be fine, right? So, guys, when is gonna happen? Tomorrow, 6 months, 1 year, 2 years, 5 years? I always tell my wife, I don't know when stuff is gonna happen. I'm not the you know, maker or creator of this, right? I don't know how long this thing's gonna happen, but unless something changes, just like on the chart, it goes down. When we are going down on the chart, we are assuming the trend is gonna continue in whichever way the trend is going. When something changes, that's when we can say, when the trend breaks, that's when you can say, okay, stuff changed right now. We can look positively. But as long as you are in a bad trend, you can assume that's just going to continue. And when something changes, then, you know, no Nostradamus. Yeah, we are not Nostradamus over here, but, you know, we don't know when it's going to happen and stuff like that. But, you know, right now, nothing is pointing in the direction it's not going to happen, right? Everything is pointing in the direction it's going to happen. Inflation is going to keep going up. The interest rates are going to need to go, you know, be kicked higher. People are gonna have a problem with mortgages. The foreclosures, you know, banks are gonna start, you know, picking up the houses and putting them on the market. People are gonna be having a hard time paying and gonna put them trying to sell them by themselves. The market's gonna be, you know, flooded with supply over the demand. The housing, the prices are gonna go down. Now, whether there's gonna be a crash or a, you know, soft landing or something like that, I don't know. The important thing to know when it comes to this, you know, how to survive this market is don't have any debt, guys. If you have any debt, try to get out of debt. Try to get out of debt. If you can, I don't know how. You know, sell the house, buy a smaller house. If you have 2 houses, sell 1 house. I don't know. I think, you know, we are not through the worst part yet. I don't think we are through the worst part. It's just that, you know, try to get out of that. Hold the dollar. I think dollar is gonna be fine. I think all other currencies are gonna be wrecked. And, you know, there's stuff to come. You know, we're gonna talk about it later. But get out of that. That's number one rule right now. Get money. Get out of debt. You know, and you're gonna be fine. Whatever, my house went up still first time I'm sold 0%, but that's still good. Like it's already happened. My house is down like 20% from last year. Wish I sold my house at the top. Would have been best trade of my life. I paid on 38 years ago. Yeah, there's a buy Bitcoin. Your debt trap is the worst. After that, inflation, the value of debt goes lower. Yeah, that is true. But here's the thing. Inflation gotta go really, really high up to get you rid of the debt, right? It's let's assume let's not assume anything. I understand that, you know, if you have some kind of hyperinflation, it's good thing to have debt, because then, you know, the value of that debt goes down, and if you get, you know, value in some other currency that's not losing, being devalued, you can use that other currency to pay off whatever is left of your. But that's during hyperinflation. So any kind of, you know, in Venezuela, in Zimbabwe, probably other places as well. This is just tool that comes to my mind right now. If you have a, you know, right now it's in Turkey as well, you know, it's going rampant. If you have hyperinflation, then maybe that might be actually a good thing. But, you know, I won't discuss too much about this. But what I know right now, by the time you get hyperinflation, by the time you get this huge inflation that, you know, that surpasses the, you know, it makes you, you know, $1 million house be worth like, you know, something like, you know, $1,000 or something like that. When you get this hyperinflation, right? By that time, it might be already too late, right? Get Swiss francs, be safe. I won't be betting just on Swiss francs just yet. But I think I would bet on the dollar, because I'm following this guy about this milkshake theory. And unless you heard about milkshake theory, you can check it out on Twitter. And it's just about, it's something like, it has to do with, you know, the dollar will wreck everything around, and then the dollar will fall as well, kind of stuff. But get out of debt, guys. Get out of debt. And what I haven't seen anything right now that says that the housing market won't crash. And as people see in the chat over here, say that, you know, somebody, you know, their house is already less worth, and that might be true. But we haven't come, you know, we haven't come there yet. Could this be some kind of top up here right now? They go a little bit down and then explodes towards the upside again. Definitely can, definitely can. Could we have a period right now? Because any kind of chart can be, you know, looked at, you know, technically. And if assume right now we are having some kind of bubble top up here, and we are going through some kind of, you know, some kind of a topping phase up here right now, you know that, you know, for whatever reason, you can have this next move towards upside above that topping phase, right? So maybe summer comes, maybe the good times come, maybe the interest rates gets lowered even more, maybe the inflation goes a little bit down, right? And suddenly it doesn't look so bad, and suddenly, you know, everybody's like, you know what, this housing bubble is done. Let's buy, and, you know, it goes rampant again like 2008 or something like that, and then it crashes towards downside. I don't know how it's gonna play out. If I knew how it's gonna play out, I would be Nostradamus, so I'm not there quite yet. But I do know that right now doesn't look that good. Gold, maybe physical gold, start prepping. The thing about gold, I think gold is gonna go down first before it actually gets interesting to buy. I think gold is gonna go down. I think gold is gonna go down, but I think eventually gold will, you know, pick up and go above all-time highs. Good bottom on the weekly. Yeah, looks like a good bottom on the weekly. We always like to look at the weekly candles. Whiskey has ultimate store of value. So yeah, I also been thinking about, you know, where can you actually store value? I don't think it's the NFTs, guys. I gotta tell you that. I don't think it's the NFTs. But for example, buying you know, Picasso, you know, real Picasso, you know, from the museum or something like that, paying, you know, millions and millions for real images of Picasso, I think that will, you know, be a good store of value. And it's, you know, through history, it has been a very good store of value, because art that's very, you know, popular, like very, you know, big art, they can store value for long periods of time, especially these dead artists, right? For example, it's not about the return, it's just about, you know, you just won't have something that's not gonna lose value. If you buy a car, it's gonna lose value. If you buy a house, it's gonna lose a value. The property where your house is not gonna lose the value, but the house itself is gonna lose the value, right? The property, the land is not gonna lose the value, especially if that land is somewhere, you know, a very good place, you know, in some kind of city or something like that. I mean, people are gonna live in cities, so that land is gonna always have some kind of value. So that's gonna keep the value, right? So that's gonna keep the value. And there are, of course, other things that keep the value, but you know, paper money. Will this keep value? I have absolutely zero to believe in that. Like Los Angeles has its liabilities. Yeah, something like that. So guys, takeaway from today's video, Bitcoin is going a little bit towards downside over here. Let's see the 50-minute chart that we've been looking at. It's a little bit breaking towards downside over here right now. Maybe my channel is a little bit wrong down here. Maybe that's a little wrong. It's breaking a little bit towards downside. The DXY does look a little bit, you know, bullish up here. It's pulling a little bit down over here, but on the daily time frame, it still looks okay-ish. It's still trying to break up here towards upside over here. You know, towards upside up here. So I'm a little bit on the fence. I believe that, you know, we are hitting major resistance. We can go up, but I would say that that's a little bit hoping right now until we see some kind of breakdown on the DXY. And DXY, the fact that it is staying up here for so long, even with this towards upside, even with this up here, you know, the spring week up here, I think it is going to continue towards upside. That means that Bitcoin might go towards downside. And when it comes to housing market, guys, get out of debt. If you can, like, do anything you can, and I don't know what's gonna happen tomorrow, 6 months, 6 years, I really don't know. And my wife's favorite thing to say is like, oh, you said that's gonna happen, it did not happen. And I'm like, wait, just wait, I don't know when it's gonna happen. But you know, if we wait, you know, for 20 years, like, does it really matter now? So I'm not saying, you know, it's gonna happen in 6 years, but you know, maybe this year, maybe next year, maybe in, you know, 1-2 years, but it's already going down. It's already, you know, sell my house, move to Thailand for a while, skip the war. Yeah, that might be the plan. I think if there is any kind of, you know, World War III or something like that, I think Thailand will be fine. Everybody will be going to Thailand, and you know, we all of you guys will be just sitting there chilling on the beaches and stuff like that. And you know, like, who's gonna attack Thailand, right? Who's gonna attack Thailand? So we good, guys, we good. So we got a place to meet up. We got a place to meet up. Guys, thank you for watching. I gotta go. This has been actually a very long video. I have cop. Guys, bye-bye. Take care, guys. Take care.